Say Jonathan's right. What I will what I would say if Jonathan's right is that I don't think in terms of price the market is going to get that far away from me if I am long into that sell-off. I think the market will recover. I don't think it's the beginning of a bear market. I also think that Jonathan is right about one piece, and since last Wednesday, it has been the S&P and the NASDAQ that has been under pressure. What I have made a very strong effort to do over the last couple of weeks is kind of rotate my position away from where I was previously, which was in growth names and technology. I'm underweight technology. I really only own NVIDIA, Apple, Microsoft, and Alphabet. Now I've got this position in the IWM, and the IWM is in the same spot that it was when we spoke on last Wednesday. So it's owning the banks, it's owning biotechnology, it's owning real estate names, and it's owning the cyclicals. I think that's the right place to be. If we go down, we test that low, I'm going to be wrong. But I think I'm going to be wrong in a capacity where the risk exposure that I have is going to be lessened. And I think that I will benefit because I think there will be ultimately a sharp V recovery. I don't think any retest is going to do extensive further price damage where you go down 10% and then you go down another 10% beyond that. I think the consumer and corporate environment is too strong.
Okay. Carrie Firestone, who do you agree with?
Well, I don't want to disagree with my friend Joe.
Just disagree with him. If you want to disagree with him, just disagree with him. I mean, I don't care. Let's have a real conversation here. Come on.
No, I think, okay. So I think that there are some good points that both have made. Yesterday, before I knew that we were going to be talking with Jonathan today, I ran some numbers about PE multiples, which have done what my 2.5-year-old granddaughter would say is collapsed. And Kara put them together. If you just show what this looks like, this is last year, 12 months ago to today. You can see that the weighted average P of the S&P is down 32%. The equal weighted multiple is down, average multiple is down 19%. And so what Jonathan is pointing to is really this total revision about what multiples we pay for extremely high price stocks. And Joe alluded to that also. Those stocks are down anywhere from 25 to 75%. I mean, even Moderna, which I believe is still the best performing stock in 2021, is down 70% from its high. Many of these companies are still very good businesses with tremendous growth going forward. We don't own Moderna, but there's a price at which I would. And these stocks are approaching levels that anyone in this business who really looks at growth names and valuation has to start taking seriously because they've been in a bear market. Anything that's down 20%, then down 70% has got to be in that category. It's not the S&P, not NASDAQ. It's just this big group of names. So, yes, I think that there are potentially great values. Do we think there's a recession? No, the indications right now are not so. Demand is very strong on the consumer side, industrial side. Companies are flush with liquidity. Look at balance sheets. We're seeing the unemployment rate at 4%. The participation rate will start to improve because people are getting higher wages, and that's been an impediment. So I'm not sure that I agree with Jonathan on the recession scenario, but I do think that we have a bear market in many categories of stocks, but they're becoming attractive at the price where Joe is correct, that we'll start to see levels that are attractive. And if you have cash on the sidelines, you'll be wanting to use it.